The Student Freedom Agreement, an income contingent finance option. In this video, we'll break down key terms to help you understand the Student Freedom Agreement, get a sense of how it works, and learn what you pay after leaving college. A Student Freedom Agreement is a higher education financing option in which students receive funding for their education and agree to make monthly payments in the future based on what they earn after leaving college. Let's check out an overview of how a Student Freedom Agreement works. After graduating or leaving college, students that receive a Student Freedom Agreement will pay a fixed percentage of their annual income. Your payments will be recycled back into the Student Freedom Initiative program to help fund future students' higher education. With a Student Freedom Agreement, there isn't a set monthly payment that you need to make. Instead, you agree to pay a fixed percentage of your income, so your payments go up and down as your income changes over time. Under a Student Freedom Agreement, you can make payments for up to 20 years, but students will finish making payments early if their payments have reduced the termination amount to zero. Student Freedom Agreement payments are based on the amount of funding you receive while in college and your pre-tax income after college. Students can receive up to $20,000 per year or $40,000 total in Student Freedom Agreement funds. A key term you'll want to know is payment percentage. This refers to the percentage of your income you'll owe, which is determined by how much funding you receive. Specifically, you'll owe 2.5% of your yearly income for every $10,000 you receive. For example, if you receive $5,000 in funding, you'll owe 1.25% of your income. If you receive $20,000, you'll owe 5% of your income. If you receive the maximum of $20,000 in both your junior and senior year for a total of $40,000, you'll owe 10% of your income. Another key term is payment threshold. Because the amount you'll owe is a percentage of your income, the actual dollar amount you pay each month depends on what your income is for that year. Say you receive $10,000 in funding from a Student Freedom Agreement. If you make a salary of $90,000 per year, which comes out to about $7,500 each month, you'll pay $188 per month, which is 2.5% of your income. If you make $50,000 per year, or about $4,167 each month, you'll pay $104 per month, which is also 2.5% of your income. This is the case at all income levels, except if you make less than the yearly threshold amount. This threshold amount is based on the federal poverty level and fluctuates from year to year. If you make less than the yearly threshold amount, you won't owe anything for that year. In 2021, the threshold amount is $28,980. So for example, if you make $28,900 in a year, or about $2,408 each month, you won't pay anything for that year. So how is your income calculated? Every year, you'll be asked to tell Student Freedom Initiative how much income you expect to make. If your taxes show that you made more or less than you expected, Student Freedom Initiative will calculate how much you need to pay the following year to make up the difference. But what happens if your income changes? Your income might change from year to year. Maybe you get a raise or a higher paying job, or maybe you go to graduate school and are only working part-time. Or maybe there's an economic downturn and you lose your job. With a Student Freedom Agreement, the percentage of your income you pay will stay the same. So as your income changes, so will the actual dollar amount you are expected to pay. In this example, as income changes, so does the Student Freedom Agreement monthly payment. When this person's income is around $40,000 per year, they pay less than when they are making close to $70,000 per year. When they are making less than the threshold amount, they pay nothing. With a Student Freedom Agreement, your payment obligation will always be in the same proportion to what you're earning. While 5% of your income may feel higher when you have less disposable income, the Student Freedom Agreement is designed to ease that burden by adjusting to meet your current financial resources. So what would a Student Freedom Agreement look like for you? Every student's future financial situation is unique, and so their Student Freedom Agreement will be unique too. A Student Freedom Agreement might be a good option for you, or it might not be right for you. For more information on Student Freedom Agreements, check out the Student Freedom Initiative website, or talk to a financial aid counselor at your college or university.